Welcome to day 4 of our 21-day forex trading bootcamp. Today we are going to learn how to read and understand candlesticks and the best candlesticks to focus on and trade with. Let me tell you something about forex. There's a lot of information. You don't need to go and learn everything. You just need to focus on things that will make you to become profitable in the market. So you don't need to master all those candlesticks, patterns, different patterns. You don't need them. In this training today, I'm going to teach you the candlesticks that you should focus on. These candlesticks appear on your key levels and your point of interest. Once you understand these candlesticks, whenever you are taking a trade, you will see them, you will remember them, and you would know their importance before you execute a trade. Like I told you, I'm going to teach you forex trading like a nursery school student. I will draw everything by myself, and you should also have your paper and pen so that you can jot down most of the things that I'm going to share in this video. All right, so let's go there. What is even candlestick? This is what we call candlestick. This thing you are seeing here, this is candlestick. This is how it appears. So now I want you to observe something. When we get to trading platform, if you see candlestick like this with red color, that is a sell candlestick. It is called bearish candlestick, red color. And if you see a green color, it is called bullish candlestick. That is a buy candlestick. Green candlestick move upward only. They move upward, while red candlestick move downward. That is a sell signal. All right, so this is what we call candlestick. They come in different shape, and I'm going to draw them and explain them one after the other. This thing you are seeing, this one here, is called wick, and this one here is called wick. The same thing, they are wick. All right, that's how we call them, wick. All right, then this one here is body. That is body. We call it body. All right, body. All right, then here is called upper. Here at this level here, we call it upper. That is upper. Then this level here you are seeing is called lower. All right, it's either you call it upper or high, or you call it lower or low. It's the same thing. All right, what I want you to know is this is body of candlestick, this body. So for bearish candlestick here, this level you are seeing is called open. Why? Because it moved downward. That is red candlestick. It moved downward. Here is open. Because once it open here, after making this wick, it open here, it will start moving downward, right? Before it comes to here, then close, then it will close here. That is sell candlestick, red candlestick. It will close here, right? This is close, this is open, right? All right, so once it close here, is either another one open here, right? Another red candlestick open here, right? Then move down to here and close here before another bullish candlestick will form, right? This is bullish candlestick because bullish candlestick open here. For bullish candlestick, it open here, right? Then go upward and close, right? It close here. For bullish candlestick, that is buy candlestick. All right, the one with green color. All right, this is the one with green color. You understand? So for the sake of this training that I'm doing here, this one are the sell candlestick. This one is buy candlestick because it moved upward. So once it move upward, is either it keep moving upward by creating another candlestick like this, open here, another open, then come to this level and close again. You understand? So why is it that candlestick are moving downward and upward? The reason why is because of buying and selling pressure. If you see candlestick moving downward, let's say this is the last candlestick on your chart and it's moving downward, that means there are more sellers than buyers. If the next one move upward like this, that means there are more buyers than sellers. All right, that's what it means. So the shape of the candlestick really matters. The shape really matters, and we are going to discuss everything in today's class. If you see a candlestick with long wick like this, a candlestick with long wick, and the wick is up, not down, not this one, the wick is up like this, that is telling you that there are selling pressure in the market. All right, pressure in the market. All right, and if you see a candlestick with long wick down like this, down, that means there are buying pressure in the market. All right, that candlestick is telling you that the market is going to move upward, and this one is telling you that the market is going to move downward. This one is always red. If you see a long wick up like this, the candlestick is red, not green. But if you see this one, the long wick is down here, the candlestick is always green. Right? Green. You have to understand the difference. Red, right? So the next one is, if you see a candlestick like this with small wick, this just small wick like this, small wick, if the candlestick is green, very big like this, long with small tiny wick, and the candlestick is green, it's telling you that there is more buying pressure. There's a lot of people that are buying at that moment. And if the candlestick is red, it's telling you that there is more selling pressure. A lot of people are selling. It's a sell signal. This is what this candlestick is telling you. Then if you see a candlestick like this, short, just short like this, and with long wick like this on the two side, long wick like this, if the candlestick is red color, it's telling you that there is low selling pressure. But if the candlestick is green is telling you that there is low buying pressure. But if you see three candlestick like this, three candlestick, if you see them in this position like this, let me tell you this thing. After this class, if you go to your chart, you see this candlestick. If you see them like this, they are usually red color, not green. If you see them like this, that means there is buying pressure. They are always in green color because they move from small, big. All right, and this one move big, small, smaller. Another candlestick you should pay attention to is bullish engulfing. This is bullish engulfing, right? This is bullish engulfing. The big one is covering the small one, and the small one is red. The big one is what? Green, right? This is bullish engulfing. Bullish engulfing, right? This is bullish engulfing. It starts with small red candlestick and big green candlestick. This one is bearish engulfing. This is bearish engulfing, big one. All right, bearish engulfing. engulfing. All right, the small one is green. Are you getting me? The small one is green while the big one is red. This is bearish engulfing. If you see this candlestick, it is telling you that the market is moving downward. Market is moving downward. If you see this one, it's telling you that the market is moving upward. The difference is the small one is red while the big one is green, and the big one is covering the small one if you are looking it from this angle here, right? And this one, the big one is red and the small one is green. The big one is covering the small one if you are looking it from this angle, right? So that's the difference. So the next candlestick you should pay attention to is morning star. Morning, just like your morning where you know morning, bro, morning 6. So this is morning star. Big one, small one here, all right, then big one here, all right. So the difference is this big one is red color, while this small one is green. This one also is green. That is morning star. If you see this candlestick on your chart, it's telling you that the market is moving upward. Then if you see this candlesticks, all right, it's just like this one, the same thing. This one is facing up, right? This space is up, this space is up, and this space is down, right? That's the difference. So this one is telling you that the market is moving downward. This one is red color. This one is red color, all right, while this one is green color. Green is telling you that the market is moving downward. This is called evening star. Study this thing very well, because these are what you need to become profitable in the forex market. They are very easy. Once you can identify them on chart, it is easy for you to make trading decisions. All right, so the next one we have doji candlestick. So this is doji candlestick. Green color is telling you that the market is moving upward, while doji red color is telling you that the market is moving downward. All right, this is doji. Pay attention to it very well. All right, so the next one is three line strike candlestick. This is the candlestick here. Small one like this, another one is making a step, right? Another one like this, making a step, then big one like this. You must see this candlestick on your chart. You must see this big one is red, right? And these three are green. You understand? So if you see candlestick like this, it's telling you that there is more selling pressure in the market. These ones, they are what? Red color, and this one is green. All right, green. Don't mind my handwriting. This candlestick is telling you that there are more buying pressure. All right, this is what this candlestick is telling you. It's different from the one that I showed you recently. Which one? Let me go there. It's different from this one. So the next one is multiple candlestick rejection. Multiple candlestick rejection. So let's say, for example, this is your key level, right? We are going to discuss key level later in the bootcamp. All right, and you have small candlestick here. Small candlestick. This level is also called resistance level. All right, and when you have small candlestick here and you have one that make a big move, a little big move, This is what we call multiple candlestick rejection. At this point, don't enter a trade. Wait for the candlestick to move enough. Then come down here. If it come down here, then go back and retest your resistance level. That is when you enter what? Sell. All right. Support level, and you have multiple candlestick rejection, small one like this, and you have them here, and you see a big one like this, all right. Big one like this is telling you that the market is moving upward, but don't enter a trade until this big one creates another small one, come down and retest your support level before you enter buy, because after the retesting it will go up. All right. So if you are trading with candlesticks, there are conditions before you enter a trade. Number one, the longer the wick, the higher the change in market sentiment. Then focus on candlesticks at key levels or a trend line. Key levels is your support or resistance level. We are coming to that, so be patient. All right. Next, look out for reversal candlesticks patterns at key levels. Then wait for price to touch the next key level before you enter a trade. Also observe to know where the price reversing or breaking the key levels. You understand? Combine candlesticks with other technical analysis before you enter a trade. The more confluences you have, the more confident you will be in your trade. You understand? So let's look at the confluences. Number one, price must touch the resistance and support level before you enter a trade. Number two, price must break trend line. Number three, there must be a moving average crossover. Then number four, it must form long wick doji pattern. Don't enter trade immediately price touch the support or resistance level. Wait for confirmation before you enter a trade and focus on your risk management. So thank you for watching this video and see you tomorrow. If you have any questions, you can drop in the community.